Good morning, gang. Good morning. Welcome to this week's Bitcoin update. First and foremost, big shout out to Prime XBT for sponsoring today's stream. If you don't know who Prime are, Prime are a platform where we can not only trade crypto, but we can also trade FX, commodities, and stock indices. And the beauty of these guys is you can use crypto as collateral, so you can use either Bitcoin or USDT to trade against any of these pairs. If you use our links down in the description and our codes, you can get up to a 7,000 USDT bonus and use the second code as well, and you can get 25% off trading fees. So yeah, if you want to find out more, use the link down in the description and have a read in your own time. First and foremost, guys, as usual, nothing discussed today is financial advice. I'm not a financial advisor. This is just for educational purposes only, and it's my view of the markets. And now we've got that out of the way, let's talk about Bitcoin. So first and foremost, obviously we had FOMC last night. The rates came in exactly as predicted, so no change. However, we still got obviously the pullback. So why did we get the pullback? Well, we can take a deep dive into the charts and figure out, why this area was a pullback area. There's a few things. So first and foremost, obviously, we were talking last week on last week's YouTube update. Here's a small clip. While price was down, ranging back at the EQ of the range, and this is what we were talking about at the time. And just like that, if we throw on the range itself, like what we were talking about last week, we got the range high. So obviously we were looking at the top of this red box, which effectively would have taken out these stops. We were looking to see if we got a reaction. We did get a slight reaction here, but nothing substantial. Let's make this full screen so we can see this a little bit better. We did get a reaction here, but nothing substantial. We got a small pullback, but then obviously price continued to pump higher. And obviously throughout the day, we got the first wick high, which obviously was on the Tuesday, which again, I was talking about it on Twitter and I was talking about it in Discord. It's fine to scalp against the trend, but the one thing you need to understand is when you're taking shots against the trend, when you're seeing a little bit of weakness, is lock in profits and put your stops to entry as soon as you can, because obviously the trend is still locally upwards. So if you are counter trading the trend, make sure you're locking in profits so you're not overstaying your welcome. Because if not, you just wishful thinking, you're hoping that it's going to drop, when realistically, as we move up, we can see here, I mean, this is on the 4-hour chart, but it's effectively the same. If you look on the daily chart, it's exactly the same. No matter what time frame you're trading, we can see where the next patch of liquidity is going to be. And let's be honest, it's right above here. We know we're going to have liquidity there because we know we're going to have stops there. Anyone that shorted this move down and hoping that it's just going to continue dropping is effectively probably going to use this pivot as a high, which is why we call it the range high. Now, yesterday morning, and like all mornings, I give my guys in the members group my trading plan, my update, and here's a little snippet from yesterday's plan. Obviously, highlighting the fact that we've got FOMC, so obviously looking for some volatility. Again, I'm not a news trader. I don't trade the news. All I'm excited about news is it brings volatility into the market, and normally it washes out a lot of people. Now for shorts, I've mentioned here, I'm still in a short, and if I was looking to add back in, I'm looking for a break of structure, and this is referring to this short here. If we then continue to get a break of structure, I'd add back in the profits that I've taken out and look to continue it down. If I got stops at entry, then absolutely fine, looking for a move up. So obviously above the proposed range highs, which could be interesting to remove our early shorts, obviously referring to my own shorts as well. And ideally for these range highs, I'd like a sweep of them. And again, referring to the sweep, just because I'd like to take this liquidity. So obviously get above this, and this is where your breakout traders come into play, and they all get excited. And we can see this, but bear in mind, this whole move is, it's a 16, call it 17% move up here. To the actual top, it's nearly 19%. So why would you weigh all of this before starting to long? And the only thing that comes to my mind is obviously you've seen this happen, and you're trying to trade a breakout, and we know it happened because we can see it from the order flow. You know, we can see these are based on 15-minute candles, but we can see as price came out and broke out of this range, we can see here, look, all of these new longs coming in, pushing price up because they're trading the breakout. You know, and as I've said time and time again on this channel, and time again within my Discord, you know, don't trade breakouts. It's got the lowest hit rate because half the time it's just, well, more than half of the time, it's just a liquidity grab. So you can see all these new longs coming in. You know, there has been squeezes all the way up, all the shorts getting squeezed out. But then once you get towards the range highs, then all of a sudden all the fresh longs start coming in. You know, well, why do you think it's a good idea to come in then? And then what happens? The news comes out and price reverses. And all of a sudden, all these stops that are sitting under each one of these candles just get run all at once. So it's never a good idea to do that. Now, coupled with why did I short up here? Well, there's another reason as well. And again, this was mentioned in the group at the time. Is we're watching this channel. Let's just change the colour so we can see it a little bit clearer. We're watching this channel. This is the channel, and prices stayed within it. You know, we've not broken this channel yet. So again, just like a range, you know, you trade it until it breaks. And yeah, we've got to wick through it. But it's just a wick through it. And again, it was a liquidity grab. When you line that up with the overall range, again, I was saying it to the members in the group yesterday, this is the current resistance right now. And this is at 6:30. This is like 25 minutes before the news came out. Again, I don't give a crap what the news is. I don't give a crap what the rates are. What I do give a crap about is what's the charts telling us? Well, the chart's saying that we're into resistance. We're into resistance at the range highs. We've just swept the liquidity. We've come into this channel high. There's a short opportunity there. So we took it. Okay? It's not an area to long when you're up here. Right, so now my rant's out of the way. What can we be looking for next? Well, let's remove these things. So let's do what we always do. Let's throw it on a volume profile. So we'll get a volume profile of this range as it stands right now. And then we'll also go back and look at the old range, which is obviously this one from the June lows to here. Now there's a couple of ways to look at this right now. Let's throw on the old range here. Now what we can see right now is the ranges are starting to merge. So obviously this new range down here is now overlapping this old range. So one thing to note, and it's what I teach about ranging behaviour, is when ranges start to overlap like this, it can, and it's not always right, it can show the trend starting to weaken. Because ideally what you want to see when you're looking at a trending market is you want to see an impulse, then you want to see a range, then you want to see an impulse, then you want to see a range. But when you're not seeing these clear impulsive gaps between each range, and you start to see the range, and then you get an impulse, and then a range, and then your next impulse, you start to come back into that range, and then it just gets weaker and weaker and weaker. So when you start to see price action effectively merging ranges like this, and it can't effectively go any further, then it can be an indication of the trend starting to weaken. So we can see with this, obviously we've got the range, then we broke out with this range, and now this range is starting to blur. So, you know, is this coming into a local bottom? We don't know yet, but it's just something to be aware of. It's something, you know, to keep an eye on. Obviously right now, this morning, we've back tested the old June lows from this range. So first thing to note is, does this hold? If this holds and we get another rise up, can we finally break out of this channel? If we can break out of this channel, then as I've said for the past few weeks, I'd be looking at this zone here. And why this zone here? Well, this is the old range point of control. So this is where the bulk of the volume is. So when price leaves a value area like this one, and obviously this is a very, very big range, when it returns, and if it gets back into this value area, bear in mind the value area low here is, call it 18.9 just for easy numbers. If it does manage to get into there, then I'd be looking at this point of control. Now, what we're looking for on top of this point of control, well, we need to see some confluence, don't we? So let's throw on a fib retracement. Let's throw on this one here, and we can see the golden pocket there also lines nicely with the point of control. So it's an area to be aware of. what else can we see? Well, if we throw on another level onto our fibs, we can see the 0.5 is just above the current wick. So a couple of things to note here is, if price does come back up, get a bounce here, come back up, break out of this current range, then first and foremost, look for an SFP of these highs. So if you get an SFP, you're trading it back down. If you don't get an SFP, then ultimately I'm looking back up into this range. Not into this range at this point of control. Now, if it does get a reaction here, if it does get this high and gets a reaction, then first and foremost, I'm going to be looking to see if it breaks back out of value, which is obviously just at the bottom of this arrow point as well. If it breaks back out of value, then back down. If it doesn't, then we can look higher. And if we are looking higher, then chances are we're going to continue trading this value area. So value area high, value area low. And then you've got the EQ right here of this old range. Get above that, then we can start targeting towards range highs. Obviously there are levels in between this, but just as an overview, obviously the guys in the group get the more in-depth analysis. So if you want to find that out, then come check out our Discord. Now what happens if we just break down from here and we just continue in the range? Well, let's have a look now. So let's remove this old range here. So for now, we've not successfully broken out of this range. So for me personally right now, we're still trading this range. And we trade the range until it eventually breaks. And it will break at some point. Now whether that's the upside or the downside, nobody can tell you that because nobody's got a crystal ball. If price does continue to drop, do we get acceptance back into value? If we get back into value, then we're just trading within value. And obviously we've got levels in between here to keep an eye on. We've got the EQ, which would be a nice sweep of these lows. If no reaction at the EQ, obviously we've got the point of control. And again, it'd be a nice sweep of these lows. You're always targeting liquidity. Just think about, what's going to hurt the most people when you're trading. That's what you got to think about. Where are people's stops likely going to be? Well, we can let's say that we're going to have stops underneath this wick here. Now, this wick here is only on Bybit USD inverse pair. USDT pairs don't have this wick here, so something to be aware of. Obviously, we're going to have stops below here. If it goes any lower, we've got the value area low, and we obviously have a pocket of liquidity down here. Lower than that, like we said, potentially a swing failure pattern, grab this liquidity, and then you continue trading this range back up. No reaction down here, then you just let it drop down to the lower levels. Now, we've discussed the lower levels in previous YouTube videos. If I remember rightly, I'll try to leave a link at the end, and you can look for our levels further down. But for the time being, we're just sideways. We're just sideways. Everyone's, just because we're at a range high, and this happened, so many times in the previous range. At range highs, everyone loses the mind. And that's it. The tweets are, bull market's back, that's it, we're going back up to 100k. And, the excitement, the FOMO is real. Range lows, every time we came down here in this range, oh, that's it, we're nuking down to 10k, oh, we're nuking to 3k, oh, it's game over, we're done. Same down here. We bounced. We got a decent bounce. Then as we start coming back down, that's it. It's game over, game over, game over. Now we start to come here. Oh, it's bullish. And we get up here, and all of a sudden we're going back to all-time highs again. It's mass psychology. This is how the markets work, mass psychology. If everyone's getting FOMO, then start to A, take profits, and B, look for shorts. When everyone's getting fearful, take profits on your shorts, and potentially start looking for longs. You don't have to catch the absolute bottom wick. And this move here, my entry is actually higher. Because you don't have to wait that. Wait till you get the reaction, then add back in on a pullback. Same again here. Wait for your reaction, add back in on a pullback. If it continues bullish structure, then you got quite clear invalidation. Again, it's where your stops are going to be. So yeah, that's it. Short and sweet today. Obviously, if you guys want to learn how we trade and obviously get access to the Discord where I give you my daily trading plan, including all the areas that I'm looking at, plus obviously there's all the free group and everything above as well, then first and foremost check out our website, spitfiretraders.com. On the home screen you can get access to our free Discord down here, and there's plenty of alpha and plenty of hints and tips in there. You'll also get access to a lot of resources as well, like for example my trading journals, which is all free, my position size calculators, how to use risk management. There's loads of stuff in the free Discord. And obviously then if you do want to learn to trade like we do in the co-pilots, then check out our co-pilot section. You know, for the low old price of 50 quid, then you get access to nearly 80 hours worth of educational content, all in video format, all separated into modules. You know, we've got, there we go, everything from absolute basics, introductions, you know, how to use platforms, how to use the position size calculator, trading journals, you know, support and resistance, very simple stuff, you know, Fibonacci, whether that's retracements, extensions, time, so much things. You know, your volume analysis, because obviously volume is a big part of what I play. You can see because I use the volume profiles, patterns, harmonics, order flow, Elliott wave, huge section on Elliott wave, which has really helped the guys out even on low time frame. I prefer it on the high time frame, but on low time frame it can give us ideas for swing failure patterns, for example. Chart and chill streams, where I mark out all my high time frame and low time frame setups in front of you so you get to see how I work in real time. Obviously all the cheat sheets, and then we've just finished the trading psychology modules, and there's a heck of a lot of alpha in here that a lot of people don't seem to talk about, like for example how to trade for a living, and you know what stresses can come with that, and how to counter those stresses. So yeah, obviously if you guys want to check that out, go check out our website, spitfiretraders.com. If you've enjoyed today's content, hit that like button, don't forget to subscribe, and leave a comment down below, let us know that you've liked it. And yeah, until next time, safe trading guys, as you were. Bye bye.